Hello, good afternoon and welcome. My name's Kevin Igoe from PFP and I'm delighted to be joined today by 4 representatives from HMRC Fraud Investigations Service. This is an area in which their powers are increasing and is becoming much more active as time goes by, and really, practitioners do need to be more familiar with the area than perhaps we have been. We will take questions throughout in the normal manner. Now, I've got there the names of our friends who've joined us today. So we have Sam Dean, Rhiannon Mantaki-Becker, Becky Blanchard, and Des Newman, who is still trying to dial in, I think. So perhaps if I could ask each of you...
I've now got in.
Hi there, Des.
This is Des. Yeah, sorry.
If I could ask each of you, so Sam, perhaps first, just to say a little bit about your background, how long you've been with the department and the areas that you're in, and then we'll move on through the presentation itself.
Sure, thanks, Kevin. And good afternoon, everybody. My name's Sam Dean, and I'm Assistant Director in HMRC's Fraud Investigations Service. I've currently got responsibility for our approach to working with agents, enablers and international partnerships. But as it says on the slide there, some of my main areas of responsibility are in relation to our enablers of criminality work and the implementation of the corporate criminal offence, which we're going to talk a little bit about later on. I've been in the department for just over, or just coming up, 12 years. And the most of that has been in and around offshore tax evasion and our top end civil investigation work, and then more latterly moving into enablers, facilitators, and corporate criminal offence.
Okay, thank you. Ryan.
Hi everyone, my name's Rhiannon Mantaki-Becker and I'm really pleased to be here with you today. So I am currently HMRC Fraud Investigations Service Lead on Economic Crime Strategy and Policy, and it's my responsibility to look at how we tackle illicit finances internationally through partnerships with the private sector and through engaging with our cross-government policy colleagues. I've been in HMRC for around 5 years now and have led on sort of organisational strategy throughout that period. So thank you very much.
Thank you very much. Over to you, Becky.
Hi, I'm Becky Blanchard. I work in economic crime supervision. I lead on our promote strategy, which is around helping businesses understand what they need to do to comply with the money laundering regulations. And I've been in HMRC or in the civil service for about 14 years. Thank you.
Okay, that's great. Thank you very much. And lastly, not least, Des.
Yeah, thank you. Sorry for the problems initially dialing in, but I've managed to dial in now. So I've been in the department HMRC for 31 years. I've been in economic crime supervision, or anti-money laundering supervision as it was, for 13 years. I started out as a compliance visiting officer, so undertaking compliance interventions to supervise businesses. I now am a compliance team leader, so I've been managing a team of officers doing the same sort of work that I was doing previously.
Okay, thank you very much. So as we move along, as I said, if anybody has any questions, please feel free to put them in the question box in the usual manner. We will be sending a PDF of the slides afterwards for people to look at. Okay, so
thanks, Kevin.
To you guys.
Thanks, Kevin. So we're going to try and cover a broad range of topics this afternoon. So I'm going to start. I'm just going to do a brief overview of what HMRC's Fraud Investigation Service is, and that should serve as good context for the other sessions that we're going to talk about. So Ryan will take us through the new Economic Crime Division. Becky will touch on the work of our supervisory function, and then it's back to me to talk about the corporate criminal offence. And at the very end, just a heads up on some work we're doing regarding the Tax Crime Alliance. So if you could move on to the next slide, please, Kevin. Which is no more than a placeholder. There's no whizzy slides or graphics to this section. As I said, just wanted to give you all a little bit of context about what the Fraud Investigation Service is, where it's come from, and some of our priorities, which, as I said, should serve as good context for the remaining sessions. So we launched the Fraud Investigation Service, or FIS, as I'll probably refer to it from now on, about 5 years ago. And the focus was really on bringing together all of HMRC's criminal and civil fraud investigators into one business area, all under one roof, which I think at the time, and possibly still is, a world first for a tax enforcement organisation. We were really keen to harness the skills, capabilities, the knowledge, so that we could become a really mature law enforcement capability, built on decades of experience of tackling smuggling, organised crime, and with the deep tax expertise required to understand and tackle some of the most complicated financial crimes. We've got, I think, around 5,000 or so people. I think that's due to grow somewhat over the next 12 months on the back of some recent investment. But about 5,000 people out of HMRC's 60,000 people. And it's always worth, I think, reminding ourselves when we're talking about, fraud and tax evasion, the Fraud Investigation Service, that we are operating in a climate where the sort of voluntary payment of tax and the tax collection rate, should I say, is already quite high. So about 95% of the tax that's legally due is paid. And to set that into context in terms of some numbers, I think in 2019-20 alone, HMRC collected £636 billion, so an awful lot of money. But that missing 5%, for want of a better term, covers a really broad range of behaviours, from people who will make genuine mistakes right through to some of those individuals seeking to deliberately commit tax fraud and tax evasion. And it's that latter part of it, that sort of deliberate intent to commit tax evasion and tax fraud, where the Fraud Investigation Service comes in. And we tend to focus on the most serious and complex tax fraud offences. But even within that, I guess the subset of the subset, if you like, again, we're dealing with a wide variety of behaviours and frauds, from global organised crime groups controlling international trade in illicit cigarettes, through small groups of well-resourced professionals creating really complex schemes to evade tax, super wealthy individuals hiding money offshore, phoenixism, and all of the forms of deliberate non-payment. So I guess it's worth thinking about us in terms of, any serious fraud in relation to HMRC's responsibilities is very much our bag, our responsibility. But that's a big ask and a big challenge, and to do that, we've got a real wide variety of roles and specialisms within the Fraud Investigation Service. So we've got tax experts, tax professionals, we've got criminal investigators, we've got data intelligence analysts, forensic accountants, cyber specialists, and so many, many more. And as you'd expect, access to the full range of law enforcement powers, from arrest and asset confiscation to the use of the more covert techniques and capabilities. And more, in the last few years as well, we've also incorporated our HMRC function as a supervisor. So within FYI, we also have a function where we are one of 3 statutory supervisors to the UK's anti-money laundering regime, and you'll hear a little bit more about that from Ryan and Becky. So what have we done so far? How successful have we been? Well, over the last 5 years, we have launched about 76,000 civil investigators, more than 4,000 criminal investigations, and over those 5 years, we've secured more than £25 billion worth of additional tax, which goes right back into the exchequer for funding vital public services. And along the way, I think we've got over 3,500 criminal convictions as well. So if you think about that 25 billion, you think about over 5 years, give or take a little bit of fluctuation year on year, we're ultimately a £5 billion business. And again, in terms of the range, we've investigated frauds perpetrated by high-profile barristers, accountants, lawyers, investment bankers, company directors. We've tackled money launderers, tobacco smugglers, international VAT fraudsters, and we're also increasingly looking at targeting those who help enable others commit tax crimes, ensuring that they pay the price just as firmly as those who actually commit the fraud. And it's my area of responsibility, which I'll talk about a little bit more later on. But we've currently got more than, I think, 150 enablers of tax crime under criminal investigation, and I'll set that in the context of the corporate criminal offence later on. But as much as we talk about our role as a law enforcement agency or law enforcement arm of HMRC, we know that our response to tax crime and tax fraud cannot solely be about striving for prosecution. It's about how we make the best possible use of the range of powers that we've got, how we can leverage working with partners in the private sector in order to achieve some of those results. So our focus, is very much on achieving the right outcomes for the UK, for the Exchequer, rather than simply chasing arbitrary targets for arrests and prosecutions. And certainly the way in which I think we're working with the private sector is becoming an increasingly important part of what we do. And again, you'll probably hear a little bit more about some of that from us later on. So it's only a 5-minute overview, but hopefully that sets a little bit of context about Fraud Investigation Service, how we're operating, and the size of the organisation that we're dealing with. So I will hand over now to Ryan, who's going to take you through an introduction to the new Economic Crime Division. So I think it's yeah, next slide. Thank you, Kevin.
Thanks, Sam. You cut out for me a little bit once or twice, so I don't know if it's my signal or yours. So please shout, Kevin, if you have any issues hearing me. Thanks, everybody. So I'm going to talk to you a little bit about the Economic Crime Division within HMRC's Fraud Investigation Service. So this is one core part of what FIS does as a whole. FIS's core mission is about protecting funding for UK public services, investigating the most harmful tax frauds and criminals, and ensuring none of them are beyond our reach. And the Economic Crime Division within the Fraud Investigation Service supports that mission by reducing the impact of serious fraud on the UK's tax system through the disruption of illicit financial flows and the recovery of proceeds of fiscal crime, and through protecting the UK against the risk of money laundering and terrorist financing through world-class supervision. We do this so that we can have a positive impact on society, and our contribution is about protecting our economy from harm and disrupting, deterring and dismantling criminals or seriously non-compliant people who attack our tax system or supervised sectors. So I hope you'll agree that we have a sort of clear and compelling mission, and then what we do in order to deliver that mission is through a range of getting together the appropriate specialists, the appropriate powers, conducting the right activities and working in partnership. So in terms of specialists, the Economic Crime Division amalgamates asset recovery specialists, proceeds of crime operations, anti-money laundering supervision, illicit finance strategy, and insolvency specialists into a single unit.
You broke up that last sentence.
We are an operational part of FIS, and with that comes expectations of meeting high targets of delivery. So I was just saying the Economic Crime Deputy Directorate amalgamates asset recovery specialists, anti-money laundering supervision, and strategy specialists, so we actually targets and deliver our work to a really high standard in terms of quality and outcomes. And to do that, we have a really wide range of powers and tools. So we're privileged to have one of the most holistic suites of powers and capabilities available to any single tax administration in the world. And we must show great determination and skills to apply those in the most effective way. We use our full range of powers to maximise our impact, systematically recovering proceeds of crime. This includes civil powers that don't need prosecution, such as account freeze, POCA Part 5 investigations, as well as the use of money laundering regulations, civilly and criminally, and confiscation and other proceeds of crime powers. So what do? What's unique about us as an organisation is that we undertake such a wide range of activity. So typically you have anti-money laundering supervisors and you have law enforcement agencies, but HMRC is both. But we are a supervisor and we aim to support businesses to protect themselves from exploitation, but we also take action against criminality and non-compliance. And although we do support wider law enforcement activity, think are money laundering, and tax crimes are the predicate offence in the money laundering. So we're interested in a wide range of money laundering threats. Some of our key areas of interest include the criminal exploitation of cash and liquid assets, trade-based money laundering, and the use of professional money launderers. And finally, to deliver on our mission, we have to do this in partnership, as Sam said. We cannot act alone, albeit we have a comprehensive suite of powers. We must work proactively with industry to promote good compliance and help identify and mitigate the risks of economic crime. We must look to prevent the opportunities for fraud by working with policyholders to design policies and processes that minimise the risk from the front. And we must respond robustly when we are identifying organised crime or serious non-compliance in the system. And that means working closely with our law enforcement partners domestically and abroad. So on to the next slide. Thanks, Kevin. So illicit finances, economic crime, money laundering, whatever you want to call it, there's no agreed definition. But what everyone does agree on is that it's a growth area for government. I think my signal might be dipping in and out a bit, so I'll see if I can move somewhere a little bit better in my office. We'll crack on and then just shout if this gets worse or better. So why do governments care about economic crime? It's because it harms communities by fueling street crime, and it harms the fabric and reputation of our economy as UK PLC. It's hard to quantify, but our estimates are that hundreds of billions are laundered annually. Over the last decade, interest in money laundering has increased transnationally, and it's also intensified within the UK. So you just have to look at the range of things that UK has been doing over the last few years, publishing risk assessments, setting up the National Economic Crime Centre in 2018, the announcement of a new economic crime task force in 2019, and the publication of a comprehensive economic crime plan also in 2019 to demonstrate that intensification has been occurring. The increased strategic focus has also been accompanied by tangible resource increases. So there's been across government investment in the UK's financial intelligence units, and as seen on this slide, there's been investment within HMRC as well. There's been announced at budget additional money, 180 million, that will fund new resources and technology within HMRC. And I think this is recognition of the sort of leading role that HMRC plays in tackling economic crime across government. So what we'll be doing with this additional investment, if we go to the next screen, we will be recruiting additional specialists, so about 400 additional people. That's across operational, investigative specialists through to sort of legal experts and intelligence analysts. And we will be using that additional resource and capability to reduce the £10 billion tax gap caused by criminality and evasion. And to do that, we will ramp up our detection and disruption of illicit financial flows and associated organised crime groups. We will recover more proceeds of crime. We will continue to deploy our full range of powers to maximum impact, making use of the fact that we've got such a broad range. We will disrupt the most entrenched and harmful tax cheats and money launderers, and we will continue to intensify our focus on our strategic priorities, including money service businesses, professional money launderers, cash and other things as previously mentioned. So hopefully you caught most of that, and I will leave it there unless there are questions. Kevin, before you
finish. Yeah, we've got just a couple. We've got one from Peter. He thought he heard you say that 10% of HMRC staff were in FIS. Is that right?
So HMRC is about 60,000 people, and the Fraud Investigations Service is about 5,000 people. So
right, 5,000, just under.
Roughly.
Okay. A question from Alice. Alice has asked, you mentioned the 400 additional specialists. Is that across HMRC or just in Fraud Investigation Service? Across
HMRC, but specifically to tackle illicit finances. So, for example, we have in-house legal experts and in-house intelligence analysts who work with the Fraud Investigation Service to deliver this mission.
Great. Okay. Thanks very much. Next slide is up. Over to Becky.
Hi there. Can you hear me okay?
Yeah.
Yeah, brilliant. Okay, so just to the first slide, I've got the, I'm dialing in on audio actually because there's problems with the internet. So I'll have to kind of just say the first slide, which is who are ECS. So if we could just pop to that slide. So economic crime supervision is a key part of HMRC's Fraud Investigation Service. We're one of 27 anti-money laundering supervisors in the UK, regulated by HM Treasury. Some of those supervisors are professional bodies, but we supervise around 30,000 businesses. And the part of our role is we've got teams across the country, but we're aiming to reduce the vulnerability to money laundering and terrorist financing of businesses we supervise. So obviously we're governed by the Money Laundering and Terrorist Financing Regulations 2017, and we answer to the Financial Action Task Force. And a few years ago we had a review by the what is known as FATF, which you can find on the internet. We supervise around 9 business sectors, some of which, such as the estate agency businesses, we are the sole supervisor for them. Accountancy service providers, we supervise with other professional bodies. And we recently have taken on 2 further sectors, one art market participants and the other letting agency businesses, and that's a recent addition. Okay, so moving on to slide 2, what we expect from our businesses. We want all businesses to carry out due diligence on customers and whoever they enter into a business relationship with. That's really important. In some cases, it might be important for them also to conduct enhanced due diligence. And again, guidance on that is on gov.uk. We want to ensure that all the relevant staff are appropriately trained and are aware of the risks associated with their business. And we also want them to report on any suspicious activity report to the NCA, and obviously not to facilitate the transaction or activity. So we support them in doing that. We have a detailed, I'm going to talk in a little while about some of the key promote activity we do to help businesses. Just moving on to the next slide, just to talk a little bit about compliance activity. So from HMRC's perspective, we want to make sure that businesses keep adequate records and transaction checks. So we want to understand about that record keeping if we come on a visit. We want to understand about the internal controls. We want to test the records, to confirm procedures and address any risks we might find during the visit. Throughout the visit, we also want to kind of sense check some of the answers and to ask further questions if necessary. We also want to check if there's any cash on the premises and the reasons for that and some of the records around that. We also want to ensure that the business is doing adequate training of their businesses. So we'll review some of the training records and the arrangements they're making with that, and we'll discuss with staff if appropriate. At the close of the visit, we want to discuss any weaknesses and options to put them right. We want to help businesses get it right. We're not out to kind of find things and not help them to put it right. And we want to obviously provide support and advice to do that. We also advise obviously what the next actions may be, and we usually complete this in 1 day, but it may obviously need follow-up. and we send the notes of the meeting to the business. There is also an evaluation of the business where we review this information and we determine if further training and/or visits is required. On to the next slide, some of the intervention outcomes. Financial penalties is the default position for regulatory breaches. We have an internal governance panel which reviews regularly the sanctions and assurance that is taking place correctly. Warning letter to give limited regulatory breaches, and advice letters where we might relate to best practice on procedural weaknesses. In the most serious cases, we may invoke a kind of management case review could be undertaken. We'll identify appropriate deterrents to change the behaviour, and that's the key thing that we want to do. And we consider other civil kind of deterrents, or in some cases criminal prosecution. So moving on to the next slide, this gives you a flavour of some of the sanctions that HMRC will encounter in place. So we've got some of the civil sanctions. We've got obviously court injunctions, warning letters, civil penalties, which I say is the key tool that we would use. Fit and proper removal, so where the business has obviously got fit and proper status, we might remove that if for certain reasons. We might decide to cancel the registration. I'm going to talk in a little while about something called publication, which came in recently, which sits within my area, and that's where we publish details of penalties on a business where we consider it proportionate to do so. And prohibitions on management also. So just moving on to the next slide, the team that I manage, I thought I'd give you a flavour of some of the work we've been doing. So our area is all around communications. It's about ensuring that we give businesses the tools that they need to manage the risk of being used by criminals to launder money or finance terrorism. In some instances, we want to change the behaviour of businesses and obviously drive up compliance. We effectively target our messaging using the analytical tools and behavioural insights to be able to understand what works for one sector that we supervise won't necessarily work for other sectors. So to give you an example of that, we'll soon be launching a text messaging service to be able to a pilot to be able to determine if there are certain businesses out there that prefer that to our email alerts and gov.uk alerts. So we're trying to tailor it to the businesses we supervise, and we work collaboratively to demonstrate the impact of our promote work, ensuring that it continuously informs our approach. So and we also want to create an energy and enthusiasm across economic crime supervision for the work we do and the impact that it's having. So we have a very much a joined up approach. So moving on to the next slide, how do we do it? Again, arm ourselves with the best intelligence to make sure we're targeting the right information at the right people at the right time. We engage with internal and external stakeholders, including other supervisors. We work across government. Give you an example of that. We worked with the Home Office on a Flag It Up campaign you might have seen a couple of years ago to try and help businesses understand what they need to do to submit a SAR. We work with law enforcement agencies. We've done joint weeks of action over the not last year, but the year before. And we work with trade and representative bodies to strengthen our message. A key example of that is where recently we've worked with trade and rep bodies in the art market participant sector to try and make them understand what they need to do to comply with the money laundering regulations, obviously because they're a new sector coming on board. And we use the best channels to reach our target audience. I've just mentioned one, which is always about text messaging, but we use digital, face-to-face, social media platforms, and again, evaluating the effectiveness of that. Moving on to the next slide, to give you some figures and some context, our webinar programme, which all the recordings are on gov.uk, over the last 5 years, we've hosted 26 live webinars across all our business sectors. Almost 7,000 businesses have taken part, and in the webinar we have a presentation. We go through a presentation, and we have detailed Q&A, panel Q&A with experts and leads in that field. Over 250,000 people have viewed the recordings on gov.uk, and I've included a link there. A range of topics are covered. First, when we started, we had what you need to know webinars. We did a lot of what you need to know webinars for each of the sectors. And now, more recently, we're doing kind of more specialist bespoke webinars, with some with the NCA, some with other partners, raising awareness of risk risk factors in those sectors. And we've recently done that for MSBs and 250s, as money services businesses and trust company service providers. We work jointly with other supervisors, as I've mentioned, for example, the National Crime Agency, to deliver some of these webinars. So on to the next slide. Emails and e-learning. We use a managed government delivery email service to target our messages to our businesses. And in 2019-20, we issued over 140,000 emails to businesses. Our open rate is between 45 and 50%, which seems quite low, but the overall benchmark, if you like, in both the public and private sectors is around 20 to 30%. So we get a good open rate, and part of the reason I think for that is about targeting, trying to target those messages so that we're not bombarding businesses, but we're giving them the latest information. And we also have 2 e-learning products, and we want to build on this. One for estate agency businesses and one for money service businesses. Moving on to the next slide, on gov.uk, which we're revamping our pages at the moment, but we have 40 pages of content relating specifically to what businesses need to do to comply with the money laundering regulations. We've seen around 59% increase over the last 5 years in views of guidance, with overall gov.uk page views totaling 635,000 in 1920. Last year, we published the detailed risk narratives, which have been really successful, I think, in terms of open rates, in terms of click-through rates. We've done 1 risk assessment per sector, and we review those every 6 months and update those accordingly. We also produce risk alerts, which we send out to businesses, and we work obviously along with other government departments and law enforcement to ensure that those emails hit the mark, if you like. Moving on to the next slide, the money laundering regulations implemented in June 2017 placed a duty, and it's important for me to say the duty bit, on HMRC to publish details of businesses who do not comply and receive a penalty. It's fair to say that we look at each case individually to determine if we publish with their full identity, anonymously, or not at all. As part of the actual regulations, Reg 85, information retained on gov.uk for a period of at least 5 years, and that's in the regulations. We don't publish at all if it would jeopardise the stability of the financial markets or an ongoing criminal investigation, or it is of a minor nature. And we publish anonymously if a decision is made to protect potential personal details of individuals. We defer publication, and we've done this a number of times, if we decide that it would be disproportionate to publish in full, and look at that until such time as it is no longer disproportionate. So the key thing with our publishing policy is that we want to ensure that we allow proportionality. We're not publishing something that we believe is disproportionate, and we give the business the right to represent themselves against publication, and we review that We publish every 2 to 3 months on gov.uk, and we get a lot of media interest generally when we do publish. It's an area, hopefully, which is helping to change a bit of the behaviour of potentially non-compliant businesses. And again, there's a duty on us to do that. It's not a nice to have, it's obviously a duty on us to do that. So that concludes kind of my presentation.
Okay, thanks, Becky. We've got a few questions here for you. One from AD, thanks AD. A FIS investigation where the taxpayer was involved, as is often the case, with both money laundering and tax fraud. On the basis that the tax fraud will be brought up to date by way of a settlement in the course of the investigation, as a matter of policy, will HMRC also seek to then prosecute the taxpayer on money laundering offences?
Okay, I'm going to hand over to Des on this one as more on the compliance side, if that's okay with you, Des.
Yeah,
that's fine. I don't really know the actual answer to that particular question. I can obviously go back and find out about it. Obviously, with the tax evasion side, we would refer the case to them, but then what we would actually do on the anti-money laundering side, I can go back and find an answer on that and go back to you.
Thank you.
Okay, thank you. Is name and shame, i.e. publishing the names, applied even where a FIS investigation results in full payment of tax and penalties?
Sorry, as you cut out there, can you say that again?
Yep. So is name and shame applied even where an FIS investigation results in full payment of tax and penalties?
Yeah, I mean, if so, there's two things here. If the business asks for an internal review, we generally wait until the outcome of that internal review. If the business appeals the penalty, as part of that regulation, it's important for us to we have to publish, but we put the appeal status next to it. But if they obviously pay the penalty, it will still, it could still be published if it is proportionate to do so. I don't know. So hopefully that answers the question.
Yeah. Okay. So thank you. We've got a last question from Tracy before we move on. Thanks, Tracy. Is there a minimum penalty applied in FIS investigations, and do FIS ever suspend the penalty?
I think probably does. Is that something you could answer?
So there are minimum penalties. For instance, if it's because we do sometimes issue penalties on businesses if we're struggling to undertake an intervention to them, or we're struggling to get them to supply information that we need. So then we would apply a fixed penalty for that particular instance. But in terms of penalties where we find weaknesses on a compliance visit, there's not really a minimum as such. We do determine how we work out a penalty. It varies from one sector to another. In terms of money service businesses and high value dealers, we'll take into account gross profit, etc., and also the funds at risk. So the amount of money that we believe was at risk during the weaknesses that we identified, or the breaches that we identified for estate agents, accountancy service providers, trust or company service providers. It'll be more looking at how many clients they've got, and then that will determine to a large extent the penalty. Also, we take into account things like good behaviour, compliance history of the business or the individual. So there's are different things that come into play when we calculate a penalty.
Okay, thank you. And one last one for Keith. Thanks, Keith. There's no de minimis for a report to the National Crime Agency, yet there seems to be a distinct lack of interest in anything small. Can you please say what action you are taking in response to such reports?
Okay, so I mean, I can answer it from the kind of promote perspective. I don't know if there's a compliance perspective, but from a promote perspective, we are working with the MCA at the moment on developing a series of webinars to try and educate and help people on submitting a SAR, what they need to do, and trying to improve the quality of those suspicious activity reports. I don't know if there's anything else you want to add on that, Des.
The only thing I would just add is that, and this may come as a surprise to some people, is that there's actually no compulsion on a business to register with the NCA. It's very much down to the business if they register. Obviously, if they have a suspicious circumstance that we come across when we do an intervention, we will be asking questions if they haven't reported that to the NCA. But it is actually down to the business to decide if they want to register. But obviously, we would strongly encourage them to do so, and that does form a part of the interventions that we do.
And can I come in?
Yeah.
Can I come in, Kevin, on two questions that have been posed? One was the first question, I think, about where an individual is involved in tax and money laundering offences. So HMRC can prosecute either for tax and or for money laundering crimes, but the way that decision is made as to whether it's the tax offence or the money laundering, that's the decision for the CPS and the Crown Prosecuting Service, and is done in conjunction with them. So we can do one, the tax offence, we can do the money laundering offence, or we can do both, but that's the decision for the CPS. And on the point about the suspicious activity reports, so one thing that HMRC does, it has sort of a bulk data clashing ability, so it can take, or even SARS that it doesn't respond to on an individual basis, it can feed those through into its sort of intelligence clashing networks, and it can review those against taxpayer data, and it can sort of combine and bulk analyze. So even if HMRC might not respond to an individual SAR, each SAR that is produced helps form a sort of overall picture of particular taxpayers or entities, and it sort of becomes part of that sort of large network of data that HMRC holds. So we do find it useful.
Okay, so I guess the gist of Keith's question there was that even the small reports that go in, that there's no de minimis, although it may not seem that HMRC are doing anything with them, they are still being reviewed.
Yes, so for our supervised sectors, we still have the ability to clash in bulk against all of those.
Yeah. Okay, great. So if we move on over to Sam, I believe, corporate criminal offence.
Thanks, Kevin. And I'll try and move through some of this reasonably quickly, so we've got hopefully some time at the end if there's any specific questions. So if you could move on to the next or the first slide of this section, please, Kevin. So when talking about the corporate criminal offence, it's worth setting that in the context of what we mean by enablers or facilitators of criminality. So an enabler of criminality is really anyone who is providing a service which is then ultimately used to commit an offence against the HMRC function, such as tax evasion. We would ordinarily look to segment enablers based on whether or not they were unaware of their services were being used to commit tax evasion, whether they were careless in how those services were administered, or indeed whether or not they were complicit in the provision of those services and fully aware that the provision of that service would result in tax evasion being committed. And as you'd expect, we would tailor our response accordingly to that behaviour. One thing I would flag here, I guess, is that often when we talk about facilitation of tax evasion, people ordinarily, the first things that spring to mind would be, financial services sector, might be tax advisors, tax agents, but it's far, far broader than that. So any service that could be used to commit an offence against the HMRC function. So that could be, you heard me talk earlier in the context of, say, smuggling. It could be storage warehouse facilitator, service providers, it could be software developers. Really that broad definition of any service which is relevant. The focus of CCO, though, and what I'm going to talk about for the rest of this session, is very much about complicity and deliberate and dishonest behaviour. So very much the red end of the graphic that you can see on the screen there. So the service provider is well aware that the subsequent criminality or tax evasion, and provides the service in full knowledge of that end result. So next slide, please, Kevin. So the corporate offence of failing to prevent the criminal facilitation of tax evasion. So now you know why we call it CCO. It was introduced as part of the Criminal Finance Act 2017, and in principle is modelled on the pre-existing Bribery Act. There are, in effect, two offences of popular legislation. One which relates to the facilitation of UK tax evasion, which is for HMRC to investigate, and the other which relates to the facilitation of overseas tax evasion, which is likely to fall to either the SFO or the law enforcement agencies to investigate. The offences are effective from 30th of September 2017, and they are not retrospective. So the tax evasion and the facilitation of that tax evasion has to have occurred post 30th of September 2017. Just very quickly, in terms of the context, the environment we're operating in when the legislation came in, very much in the midst of a drive for global tax transparency. We saw common reporting standard coming in, and a real sort of public political opinion or expectation that organisations could or should do more to try and prevent their employees or people acting on their behalf from facilitating tax evasion. Really, really important point. Wasn't about simply trying to increase the number of corporate prosecutions, but really try and change some of the long-standing industry practices that could help stop facilitation occurring in the first instance. Whilst it wasn't about increasing the number of corporate prosecutions, it certainly removed what was previously quite a difficult evidential barrier for us to overcome. So if we were looking to try and attribute criminal responsibility to a corporate for the act of facilitation of tax evasion, we'd have to look at effectively either someone on the board of directors or someone with a sufficient degree of control over the organisation, with direct in mind and will test, if you like, and prove guilty knowledge or complicity at that level. And certainly if you get into bigger organisations or more complex organisations, the defence there is quite easy in terms of look at the size of their organisation, number of transactions. You would see organisations sometimes blame rogue employees or bad apples and say, well, we've sacked them, they don't work here anymore. And there'd be no real accountability for how that facilitation occurred in the first instance. So CCO is very much about taking a different approach. No longer are we trying to attribute that criminal responsibility to the corporate for the act of facilitation necessarily. Instead, we can focus on the corporate business own failure to prevent its associated persons, its representatives, criminal acts of facilitation. And in that respect, it's very much a game changer for us. Next slide, please, Kevin. This is quite a good visual graphic of the application, the breadth of the legislation. So on the left-hand side, the UK offence, that's HMRC's responsibility. Whilst I said around it's about the facilitation of UK tax evasion, really important point here is that it does not matter where in the world the act of facilitation takes place or where in the world the corporate body is housed, is based. It's within HMRC's remit to investigate. Try not to think about this as tax legislation per se, which might seem a little bit odd at first coming from HMRC, but it's ultimately legislation about the conduct of a company's employees and anyone acting on the company's behalf. Next slide, please, Kevin. So I just want to take you through the makeup of the corporate criminal offence in the 3 stages there. So the first stage, tax evasion, has to have occurred. This isn't about tax planning gone wrong. It's not about tax avoidance. It's deliberate and dishonest evasion of UK taxes. And that could be any of HMRC's taxes and duties, individual taxes or business taxes. Stage 2, that tax evasion at stage 1 must have been deliberately and dishonestly facilitated by somebody. So they must have known that they were helping the taxpayer, the customer, at stage 1 evade tax. Now, this is a strict liability offence. So if those 2 conditions are met and that enabler, that facilitator, is acting for or on behalf of a corporate entity, then stage 3 automatically occurs. And stage 3 is that the corporate entity is guilty of the criminal offence for failing to prevent their associated person criminally facilitating tax evasion. Worth remembering and reiterating here, there is no requirement for senior management of the relevant body to have known anything about criminality or be in any way complicit in order for that relevant body to be criminally liable under this legislation. The defence is having in place reasonable preventative procedures, more on that in a minute. But interestingly, in addition to it being a strict liability offence, the reverse burden of proof also applies. So by that I mean it will not be for the prosecutor to prove that the corporate didn't have reasonable procedures in place. it is for the corporate to prove that they did, or that it wasn't reasonable for them to have them in place at the time. Next slide, please, Kevin. I won't go through all of these 6 guiding principles in any detail in the interest of time, but they are all published on gov.uk's government guidance for CCO, and you can find a little bit more information about all of them. But some really important points: it's not about necessarily zero tolerance of failure, it's about proportionality. And whilst there might be 6 guiding principles, it's about reiterating again, they're guiding principles. It is not a tick box exercise. What is reasonable for one organisation will not be reasonable for another organisation. It's really, really important that an organisation goes through that risk assessment process, understands the potential exposure that they've got to the legislation, and what they might need to do to protect themselves from it. We do also say in the guidance that, that reasonable preventative procedures for CCO could well complement existing procedures for other areas of financial crime, economic crime, be that AML, be that bribery and corruption. But it is not a case of just lifting and shifting and applying to CCO, which I think is an important point. And moving on through into the latter stages of those cycle there, we're really getting onto the monitoring and review stage. So what an organisation might have done on day 1 or early days on the introduction of a corporate criminal offence, how has the organisation changed? Has it moved into new markets? Has its suppliers changed? Has its customers changed? And has any of that changed the level of exposure an organisation has? And if it has done, what do they need to do to improve or update their procedures? Next slide, please, Kevin. So the final one is around the dedicated corporate self-reporting portal. The HMRC position is always that it's better for a customer to voluntarily disclose wrongdoing to HMRC than wait and hope that HMRC don't find out about it. So if as part of implementing preventative procedures or undertaking a review, or an organisation feels as though they may have fallen foul of the legislation, strongly urge consideration of the self-reporting portal, where the organisation can set out what's happened and how it's all come about. A CCO self-report does not infer immunity from prosecution, but as we say in the published guidance, timely self-reporting and importantly cooperation with HMRC throughout the process will be seen as an indicator of reasonable preventative measures. So absolutely within interest to come forward voluntarily and hope we don't find out about it. I don't have a huge amount of time to go through our implementation of it within HMRC, but what I can say in the time that we've got is that we do publish regular updates on the gov.uk pages about our operational activity. We've got 14 live criminal investigations. We've got another 14 opportunities under review, and they sit across 10 different business sectors. And just to come back full circle, I made the point that it's not about simply increasing the number of corporate prosecutions, but trying to change some of the culture, some of the long-standing practices, and in many ways that'll be a truer metric of success than the number of prosecutions. And I think we're already starting to see some really positive signs there. We're seeing tax experts in organisations linking in far more with their anti-money laundering, anti-bribery corruption colleagues, developing a far more robust and holistic approach to economic crime within their business, which is what we all want. We're seeing new roles being created, like head of anti-tax evasion, head of tax transparency, which I think is really indicative of that culture shift. And just to finally reiterate a couple of the points that Ryan and Becky have made, we're no different in the context of CCO. We want to work with businesses, with customers to get it right. We don't want people to fall foul of the legislation. We don't want to have to investigate. We don't want to have to prosecute. What we really want to do is get some more robust preventative procedures across different sectors, across the industries, to reduce that opportunity for facilitation to occur in the first instance. Conscious that's a whistle stop through at the CCO, but I think I've covered the main points there.
Okay, so we have a couple of questions before the final slide for you.
Yeah.
This may not be for you, Sam, it could be for Des, I think, maybe, but if HMRC suspends a registration for an MSP and it subsequently acknowledges that it was wrong to do so, what options are available to the MSP to claim compensation for loss of earnings and reputational damage?
Yeah, it probably is for me. Again, it's not something that I would necessarily be able to answer at the moment, but again, it's something I can take back to that's probably more for our colleagues within the authorization side who would deal with that sort of if when we do suspend a business. So I will take that question back to them and get an answer for it.
Okay, great, thank you. Lastly, where does a solicitor stand in the defending of a tax evader knowing they've evaded tax?
So it's probably a longer question than I've got within 2 minutes.
Yeah.
but there's a whole load of issues there in terms of client privilege and a whole load of other things. What I would say is there's a fundamental difference between trying to defend your client and misleading HMRC, and we've certainly seen instances of that in the past. And that's a slightly different issue. But probably haven't got time to get into what's covered by privilege and what's not, and the difference between a solicitor and perhaps a tax advisor in that scenario. I think that's a much broader conversation.
Okay, thank you. Lastly, in terms of carrying out a risk assessment for CCO, is there a de minimis that can be applied to the level of activity?
Tough to say. So certainly not within the guidance. We don't say that there's a particular de minimis, but I think it comes back square to what is reasonable and proportionate for an organisation to do. So if they're looking through their risk assessment and they can identify where they might have some of the highest risks, they might have some things that are lower risk, they might say, well, actually, it's proportionate for us to draw the line there because of X, Y, and Z. And that's a decision, a risk-based decision that they can make as part of that. But because every organisation will be different, because the level of exposure will be different to every organisation, there's never really going to be a de minimis that HMRC can set to that.
Okay, great, thanks. Okay.
Luckily, this should only be 2 minutes. You'll all be pleased to know. What I wanted to do was just headline some of the work that we're doing on the Tax Crime Alliance and publicised some of this on LinkedIn in the past couple of weeks. So we've talked, a number of us have talked about the importance of public-private partnerships, becoming an increasingly important part of what we do and how we can leverage the impact of our work. We've already had successes through the Joint Money Laundering Intelligence Team, which is predominantly with financial institutions. We've now just launched HMRC Tax Crime Alliance with senior representatives from HMRC, accountancy firms, law firms, professional bodies, chaired by our director of FIS, Simon York. We had the first meeting at the back end last month, where we talked about the shared aim of trying to reduce the threat of tax crime in the UK. And we'll see members of that group sharing insight, knowledge and expertise to collaborate on a wide range of issues. What we did do as part of that first meeting is look at a number of potential strands of work for us to collaborate on, which will build, which become part of our work plan, I think, over the next 12 months. And hopefully we'll be able to share some details of that soon. But also, and interestingly, opportunities for the profession to get involved in those subgroup activities and projects. So it's just a nice way for me just to plug a bit of work that's going to be kicking off over the next 6 to 12 months, and the importance of getting private sector knowledge and expertise feeding into those big discussion topics.
Okay, great. Well, thank you very much for that. As you've done your plug, I'll do mine for our tax conference, which is coming up 7th of October. If anybody's interested in attending that, it's called an unforgettable event. I can't honestly say I remember last year's, but there we have it. So yeah, we aim to have our usual really varied guest speakers there, including HMRC representatives, of course. So if anybody's interested in that, please let us know. Meanwhile, we've now reached just after 1 o'clock, so we're just under the hour. I would like to thank all 4 of our revenue speakers. Sorry, that's my own background when I joined the revenue. The HMR speakers, Sam, Ryan, Becky and Desmond. It's great to get one person speaking from HMRC. It's quite exceptional to actually get 4 together. So again, thank you all very much for the time and the preparation and everything that's been going through it. And lastly, can I thank all the listeners we've had today. I think over 300 of you registered. Apologies, the odd sound issue early on, but I think they sorted itself out. I look forward to hearing from you and to speaking with you in future webinars. Meanwhile, I invite our HMRC's friends to say their goodbyes, and we'll speak to you soon.
Thank you. Bye.
Well, thanks very much.
Thank you. Bye.
Thank you. Bye.